Well, good afternoon, everyone. I'm Banerji, and I'm delighted, absolutely delighted, to be chairing this panel for DeFi meeting TradFi. And in many ways, I think it's probably one of the most fascinating discussions in finance right now, right? So we are at an inflection point where traditional finance and decentralized finance is no longer operating in two different realms. We are intersecting. Sometimes we're intersecting in a collaborative way. Sometimes we are intersecting, we're competing with one another. But I'm hoping, irrespective of how we intersect, we are learning from one another. And today I'm joined with an incredible mix of talent here amongst our panelists. So if I may ask each panelist to please introduce yourself, your name, organization, and where you stand in terms of DeFi and TradFi, please. Thank you.
Hi, nice to meet everyone. Matthew Dawson from the Ethereum Foundation, part of the Enterprise Acceleration team. So obviously very much on the side of DeFi, but trying to bridge that gap between DeFi and institutional finance.
Hi, Cara Kennedy, JP Morgan. I head up digital asset product for our security services business. So I think I'd be hard pushed to frame myself as anything other than TradFi, but I'm definitely on the DeFi spectrum of the TradFi world.
Well put, Tara.
Hi everyone, Ralf Tanner, Nexus Mutual. I'm the head of BD. And if you haven't heard of Nexus Mutual, we're a protocol living on Ethereum in DeFi, and we act as an insurance alternative for those that invest into on-chain markets and want coverage and protection for those yield-generating strategies.
Hi everyone, Tim Shimano, CTO at Zumo, digital assets as a service-based company from here, so established and still based in Edinburgh. When it comes to DeFi, TradFi, I think by default we are somewhere in the middle because we are essentially trying to create that bridge or make that bridge slightly more accessible to everyone.
Hi everyone, I'm Timothy Stevenson. I'm with BCP Technologies, which is an FCA-registered crypto asset firm, and we're also the issuer of tokenized GBP here in the UK. So we're every day dealing with this intersection of DeFi and TradFi, our token being one-to-one backed with cash and short-term government debt.
Thank you. Thank you for that. Now, listen, guys, we can spend the next, 40, 45 minutes being awfully polite to one another, right? Or we can discuss some of the uncomfortable truths. And with permission of the panelists, I'd like to jump straight into some of the key issues that probably presents itself when you think about DeFi and TradFi. So I'll start with you, Cara, if you don't mind. JP Morgan has been exploring blockchain technologies for years now, right? What opportunities do you see in the DeFi space?
Thanks. So you're right. We've been committed to this space since 2015 when we first set up a center of excellence around blockchain at that time. And that has evolved over the 10 years to then really to the establishment of a dedicated blockchain-based business unit. As some of you may well be aware, that we have initiated our blockchain solutions on our own networks. We operate on Ethereum-based private permission networks, and we've developed a number of different solutions for clients to allow them to see the potential of this technology. I think we and our clients see the vision and the opportunity in relation to DeFi. But it is also the case that, as I think we've noted in other panels today, there are a number of constraints in terms of how traditional finance and regulated financial institutions can currently interoperate with that infrastructure. My personal view is that will come. I think the timing for that and the scaling of that is still somewhat uncertain. But what we are doing, within the teams that I work with within JP Morgan is really looking at how we can prepare ourselves and support our clients to be prepared for that transition. We work today in, when you think about traditional assets, We operate globally. We provide access to our clients across multiple geographic markets. We give them certainty and confidence that we have both the expertise and also the appropriate services and solutions to help them accommodate, the economic actions that they want to achieve. It's my view that those same services will be required as increasing numbers of assets transition into new forms of DeFi-based infrastructure, and our clients want to be able to interact with the efficiencies that infrastructure can bring, as well as some of the new opportunities that arise around that as well. And that's really where we see our role in helping to enable that, but also to provide some of that trusted servicing role that we perform in the traditional space, to the extent that makes sense and is something that our clients look to us to provide.
Thank you for that. And Ralf, what aspects of traditional finance do you think DeFi could learn from?
I was just going to, like a few people earlier, getting some audience participation, and there was a fair number of people putting their hands up for having used DeFi wallets and the like. But who here would say they've come from a TradFi background? Just get a temperature check for my answer. So I think I'm going to use a little story to illustrate. It was a press piece that Blockworks published back in March, and it was about where things, testing the limits of DeFi, where it bumps up against where the issues are, because I think we're all here for the promise of what DeFi offers. And so there's an instance where you have a vault and the Oracle, and you have the data feed for the Oracle, and there was a DeFi user, and they had put some money into this particular vault. But then between the protocol Morpho acting as the sort of base layer, combined with the vault curator and the Oracle supplying the sort of live price stream, there was some kind of breakdown between the Oracle and the vault. And so the user was essentially liquidated in the vault. And so that user, I think, published into one of the Discord channels asking the curator, the protocol, and the Oracle, like, could they help? And no one put their hand up, or everyone had a reason why it wasn't their fault. And that's understandable in this pretty dynamic, changing environment.
Yeah.
But I think versus TradFi, like, I guess, for adoption to take place of the scale that we have on TradFi, people want to know there's someone they can come to. Now, little plug there would be Nexus can offer cover for those sorts of situations, like an Oracle manipulation, a smart contract hack. So we're sort of plugging a gap and then looking to work with traditional financial actors as well, where we're not necessarily regulated but can participate with those people. So hopefully that's illustrative for everyone.
Thank you very much. So let's think about integration opportunities, right? Okay, so Tim S. So we've got two Tims, right? So we've got Tim. I'm saying Tim Z with Zumo. Is that okay?
That's the way around. Tim, Timothy.
Okay, Tim and Timothy. All right. Okay. So Timothy, from an infrastructure perspective, what are the key building blocks that's needed for TradFi and DeFi to work together?
So what I find interesting is the blockchain decentralized services was this great idea where we could build applications on top of a permissionless stack, a permissionless technology. And this great idea quite quickly ended up having some limitations, and then really smart people started building and solving. So the first wave was onboarding quite a lot of users, and the protocols became unusable. So they started building L2s, and they solved that problem to a certain extent. Then eventually they had users, they had scale, and they realized that the UI and the experience was subpar. So they started thinking and saying, how are we going to solve this? And I guess this is kind of one of the waves we're in at the moment, where they started introducing account abstraction, allowing people to create wallets without having the risk of managing a seed, social recovery, how you can give access to your assets if something happens to you. Gasless transactions. Shout out to Linnea, who's building stuff in that space. Who wants to be able to be blocked out of a transaction because they don't have enough gas fees? Today, we'll also, if we look a little bit forward, new problems have arrived, and it's, I guess, a combination of hundreds of chains, fragmented liquidity. So those are core infrastructure building blocks which are being built at the moment. Some of them have been solved, and they're now being rolled out, allowing people to access liquidity anywhere. And if we want to go even further, being able to access liquidity in DeFi as they could in TradFi, for instance. And we're seeing some interesting projects working that. And then if we look a little bit forward, I think one of the new themes which we're going to be seeing probably in 2026, it's going to be all the infrastructure that is building on top of privacy and confidentiality. Huge leaps of technology and infrastructure with ZK technologies and FHEs, which essentially are going to be solving the problem that, again, we've discussed a bit of this morning, where you don't want, it was the Gnosis card, he was saying, for instance, right now people can look at your wallet and see all your transactions. So how do you make this confidential without necessarily losing the information, because you also want to be compliant to the various regulations of the countries in which you operate. So I think that's just an illustration of where we came from, where we're going, and this ongoing quest for attracting really smart people into the ecosystem to build these new infrastructures to allow us to move forward and onboard more use cases and more users into the space.
Thank you. Thank you. If I can come to you, Matthew, in terms of the bridge between TradFi and DeFi, where do you see Ethereum in that role?
Yeah, I think it certainly feels like a bridge at the moment because there is such a gap, and that bridge will hopefully narrow as DeFi becomes more professional, as institutions start to use it, and institutions start to leverage DeFi and come closer to those solutions. I think Timothy touched on it really well. There's more and more solutions, whether it's privacy and compliance, that allow financial institutions to have the technology they need to operate on chain. And that's for the builders, the app builders, the infrastructure builders to continue to push forward and innovate. I think Ethereum's role is to be the neutral playing field where everyone can come and innovate and operate and interoperate. So just like the internet facilitated the intersection of commerce and digital payment, or the innovations that took place there, Ethereum and the Ethereum technical roadmap focusing on facilitating the throughput and transactions through scaling and continuing to be kind of the gold standard for decentralization and resilience, because fundamentally any traditional institution, financial or otherwise, that wants to bring significant amounts of value onto a chain has to have full confidence that it's secure, that the services are resilient, and that no centralized party is going to interrupt their services. No one's going to disrupt their ability to interoperate with others. And so I think that Ethereum's goal to continue to develop that and provide that playing field, provide the platform for all of the innovation to happen, is probably the key thing to turn that bridge into a smaller bridge.
Okay, wonderful, thank you. Tim, as in from a Zumo's perspective, right, where do you see the most promising areas of collaboration?
I think we touched upon a couple of areas already today. Everything around stablecoins is moving incredibly fast. I think it's going to be incredibly important for many different use cases. Remittances, cross-border payments, something that we have talked about as well today, is not a new problem necessarily, but I don't believe it has been properly solved just yet. There are complexities and issues that we still need to address within those flows. But that is definitely one of them. And then the second one, which we also talked about, is tokenization of everything, essentially. Tokenization of money markets, tokenization of real estate. These are as we saw real projects that are actually happening. Sadly, not many of them currently in the UK because of regulatory environment. That being said, tokenization of real estate, for example, is currently very big thing in UAE, and you have projects that are live and incredible amounts of money are moving through. So I think if we would focus on the next 2 years, those are the areas where we will see most progress. Now, obviously, that is just on surface level. Everything that is happening on more infrastructure and protocol level, what Ethereum is doing will also be incredibly important because it will make sure that the next wave of adoption is actually going to be possible.
I think you've, very interestingly brought us to, we've talked about the technology, but now let's move on to, you've hinted on tokenization, you've hinted on products, essentially, right? I'd be kind of interested to pick your brains on how you see this bridge that we need to build ultimately between TradFi, DeFi, right? How does it impact products? So Ralf, if I may come to you, so when you look at a product spectrum, so look at DeFi insurance, for instance, right? How is it evolving? How does it meet institutional requirements, customer expectations, regulatory expectations? And how should one be thinking about it when we're thinking about setting up products on DeFi?
So I came on board with Nexus late last year to lead the institutional franchise and the rollout because we're a decentralized permissionless protocol living on Ethereum. We have a DAO with over 10,000 members. And what we're seeing, particularly in the sort of past year, 18 months, is a significant uptake in institutional interest. I guess everyone has a different maybe frame of reference for what institutions are. But here we're maybe talking like some public names I could mention would be the likes of Fasanara or Edge Capital. Fasanara is like a very large global alternative investment manager, and they have a dedicated digital assets team. So shout out to them. We work very closely with them. They do a lot of on-chain activity. But going back a bit, Nexus as a protocol the white paper was written, I think, 2018, 2019. Co-founders are from the traditional insurance world, worked at Munich Re and other insurers. And they saw the power that Ethereum and other sort of decentralized technology could give to bringing back power to the people, that you wouldn't be shut out. And so it sort of started with some of those cypherpunk utopian ideals. And then they went through a very rapid phase of growth through DeFi summer. And then we've just been steadily building. And it's pretty hard as we're not insurance, we're what's called discretionary cover. But I use the term here interchangeably with cover. Surviving crypto cycles, surviving insurance cycles, that's kind of like a double wave amplitude there that's pretty tough to get through. But we're now coming out. And so I guess what we're seeing it is as what is it that clients and users want? And so we're speaking more and more with actors in the traditional finance space. And I guess they're getting more, they're warming up to crypto, making their first allocations. I think with Ethereum now, with the Linear team mentioning Joe Lubin and others launching their Ethereum treasury companies, that's really interesting because that's bringing prominence to staking. So they're all saying like what their strategies are around DeFi. One of them has announced they're going to have a head of DeFi. So that's bringing attention there. But people are sort of still kind of warming to it and feel a little uncomfortable with recourse. Where's my legal recourse?
Yep.
Essentially, I get told often, who can I sue? If you don't
Exactly.
pay out, who can I sue?
Yeah.
And so we're taking on board that feedback from our clients, and then we're also iterating our product. So Nexus acts as I think of us as like the on-chain version of a Lloyd's of London, obviously a lot smaller, but we cover these idiosyncratic risks in crypto that no one else is willing to underwrite. And we've built that foundational level, but now we're looking at working with offshore regulated entities in Bermuda, Caymans, other places where there's significant insurance capital, and layering that on top. So it's this blend that we're talking, this bridge, and that's kind of like, I guess, a concrete example of where we sit in the insurance space, how we'll manage that. And then that will give some of those actors that aren't quite ready to just commit capital into DeFi and the idea of code is law, they'll get some legal recourse, and that will give them that entry point.
That's great. I mean, when I think about it, right, essentially, at the end of the day, we need a better infrastructure to come up with products which are better, faster, cheaper, and actually serve the needs of citizens, right? So no matter where you play in the spectrum, you have to think about that end user experience, and risk becomes a big part of that, right? How much of that risk are you willing to take, and how much of the risk can you even quantify? Because sometimes if you don't understand the risk, are you able to quantify? So, Kara, from your perspective, what would you say are the innovations in DeFi that are probably most interesting or probably more easy for TradFi to adopt?
So I think where we've seen the most, I guess the fastest adoption has been around areas where you can create value with quite a small subset of players in the market. So, for example, we have a digital financing product which enables intraday creation of repo contracts to be created, unwound, which is largely impossible in the traditional infrastructure just because of the timing around that. So that's, the use for financing, collateral, I think those are use cases which the institutional clients see the value of operating in much more of a peer-to-peer environment, and also with the transparency that you can have there. The payment space is obviously one that is front of mind for JP Morgan. You may have seen that we have launched a pilot for our JP Morgan deposit token. I think, as was mentioned earlier, there's the cash on chain, which we've been talking about now, it seems, for years, is such a critical element, and we recognise that. And obviously, having developed some cash on chain solutions within our own infrastructure, the exciting thing about the JP Morgan deposit token is that that's our first foray into deploying that onto public blockchain. So the scope of the POC is around a small number of selected institutional clients, to demonstrate the feasibility of that initiative on Base as a layer 2. And that is, a starting point, hopefully, to where a product like that can scale and potentially offer an alternative to stablecoins with some of the beneficial features of a bank deposit. So, I think that's likely to be the trajectory, is that these will probably play out initially in more closed ecosystems where there can be that additional level of control, management of liabilities. Those things are important to large institutional players, but then we'll take those iterative steps to deploy in a more open environment. Again, working with the industry and adopting new developments as they relate to things like privacy and compliance, which are also critical to our clients. So, I think there is a real demand to get there. It's just that the challenges are not really to do with necessarily the infrastructure, it's the control environment around those.
Oh, yeah. If I wanted to be a fly on the wall, I'd be like to be a fly on the wall of that discussion where you're discussing the risk register, right? Around what are the possible risks that could, and how do you quantify them? But, which brings me to the point of operational hurdles, right? So when you have the infrastructure, the technology works, to bring it to life, you need almost an orchestration, okay? And then we get met with operational hurdles. So if, Matthew, from your perspective, what are the biggest operational hurdles that you see when it comes to a specific use case or a product launch, so as to speak?
I think there's obviously the technological operation side of things, and that's where the scaling and infrastructure plays are really important. But beyond that, I think there's a reason we're seeing such adoption in stablecoins and in money market funds and in tokenization of government bonds, because they seem to be, at least from a regulatory perspective, one of the easiest things to implement. If we are to see kind of the programmable capital markets and the increasing tokenizations of other asset classes, which will still benefit from tokenization, whether it is like fractionalization of funds or simply benefiting from the efficiencies that can be gained on chain, then regulatory clarity so that product builders and institutions know what they can make and within what kind of guidelines.
Yeah.
Whereas when there isn't clarity, when there's uncertainty, there's a lack of an emphasis to move because people feel stuck. So hopefully and I think we're seeing it certainly in some jurisdictions, more clarity around what is possible will bring confidence, and then that will allow the innovators of DeFi, but also the traditional financial products to really intersect.
Thank you. And Tim, from a Zumo's perspective, like in terms of operational hurdles, how do you see it and how do you overcome it?
I would double down actually on regulation.
Uh-huh.
We have clients coming to us, already established clients within AU, UAE, US, wanting to operate in UK and seeking partner support for that. That is one of the things we do. And the first product call is usually incredibly simple because we know exactly how we can support them, we know exactly what they need, and we have the technology to do it. Where things become a bit more complex is when compliance actually gets involved, and we have that uncomfortable conversation of all the reasons why we cannot do that and all the reasons why FCA will not allow this product to go on the market. I think having clarity, I mean, DeFi is always going to be faster. Innovations will always be faster than traditional finance, than regulator. The role of regulator isn't to innovate, it's to support, protect, but it's definitely, it feels like a bit of a burden, although FCA is becoming a lot better. We do have now what crypto regime 1-2 years away. There are going to be consultation papers that are going to be published. All that is fine, but the reality is that we are building today, and we are building today with not a lot of clarity. So we are trying to progress to a point where we will be able to go live as soon as regulatory framework allows us to go live with certain offerings. That being said, it's kind of doing things in a bit of a darkness, and that can be frustrating. So I would say for us, it's not about the infrastructure, it's not necessarily about the technology, it's more about the regulatory environment and how well can you operate within UK, within the regulatory frameworks that we currently have in place.
That's a very, very interesting point. And I'd like to come to a view on everybody with the regulatory experience, because I think the way I see it is, and you're absolutely right, the job of the regulator isn't there to tell you exactly what to do. You have to figure it out yourself. Sometimes that is a bit frustrating. It tells you what you cannot do. It doesn't tell you exactly prescriptively what you can do, per se. And then there is the risk framework of the organization and how much risk they're willing to take. A big part of that falls into understanding. And I'm kind of curious to get everyone's view on where do you see in terms of that understanding? So say when you have a stakeholder engagement, whether it's, from a JP Morgan's perspective, when you're speaking to, your risk and governance team, how easy or how hard, I know it's not easy, how hard is it to match the business needs, the market needs, the customer needs, and frame it within the context of regulatory requirement? What would be your experience, Kara?
So I think, we've just seen such a wholesale evolution into the regulatory context, even in the last, 9 months. That has shifted dramatically, particularly as a bank that is primarily regulated in the US. And I think we have seen those changing winds elsewhere around the globe as well. So I think actually one of the hardest things that I see in that space is for a firm like ours, where you're operating globally and across multiple different client segments, is both keeping track of what's going on, and obviously we have good mechanisms for that, but ensuring that's feeding into those product design discussions is critical, and enabling the core product teams to determine, where those opportunities are opening up, or where there may still need to be work done. There's also then the advocacy point, and that's a really critical part of the work that we do, is also ensuring that we have a consistent message going out to the various different regulators who are looking to provide frameworks or develop legislation in this space, to make sure that we're not siloing or putting in conditions in certain jurisdictions that then will prohibit that global interoperability, which is obviously one of the key tenets that we're looking to identify here. The other piece I'll just also flag, which is that ensuring there's a level playing field here, and there's pros and cons with that, obviously. Banks are obviously subject to incredibly high requirements, quite rightly, as it relates to AML, KYC, sanctions screening. And it's important, not to limit the innovation in this space, but make sure that there is a level playing field across non-bank, solutions and bank-led solutions in this space. And that's a kind of critical tenet for us as well. But I think, in terms of the internal kind of stakeholder discussions, this is now becoming much more of a question of when, not if. I'm sure everyone in this room has experienced the naysayers. And I think what we've seen, particularly again with the changing winds in the US, the adoption of the stablecoin space and the development of these regulated products being tokenized by some of the world's largest asset managers, that is now really focusing the mind around, where we play in this space rather than
Quite
if.
right. It brings legitimacy, doesn't it? Right?
Absolutely.
So when you have large organizations leading the way, then it gives legitimacy. Timothy, from your experience in terms of operational hurdles, what would you cite as the biggest hurdles, and how would you go about addressing them?
So we issued a stable coin, a GBP stable coin, and one of the requirements we have is to keep a one-for-one collateral in a UK bank, in either cash or in treasuries. And so what we're seeing is the biggest challenge we have is actually jumping through the TradFi hoops, which has nothing to do with regulation. This is, regulation will come when it comes. Sometimes we don't even know why. It just, everything is complicated. Is it reputational risk? Is it somebody doesn't want to basically put his name next to a crypto project? Because we cannot operate as a stable coin without being very well tied into the crypto space. I mean, in France, for crying out loud, you have Forge, which is a great company, which is owned by Société Générale, who've issued a euro stable coin and have been pioneering in that space. On the other hand, their owner, Société Générale, they will block you if you even do a transfer from your Société Générale bank account to Coinbase. So, I mean, how can you have that within the same institution? So I think we're fighting with maybe just a change of generation, and these things are accelerating really fast. And it's a shame that it takes, a US president who was debanked for God knows what reasons to say enough is enough. We need to be able to operate outside of the realms of banks to come up with a genius act, and more than the regulation, it's just an overwhelming momentum that is allowing people to basically say, I can go forward and I can put my name next to that project. So right now, I'd say like crypto technology is not slowing us down, despite maybe some of these infrastructure blocks which are missing. But yeah, they're missing maybe for retail users. But for institutional users, we can get around it. If we work in a closed circuit, like what you're doing at JP Morgan with the repo desk. All these things which bring capital efficiency. Ultimately, you have decision makers outside of regulation who see the numbers, see that it makes sense, and they're like, I don't know. I'm going to wait. So I think that's the real challenge, and I think we just need to make more noise. And I guess when JP Morgan posts their results and they've cut half of their back office because they've streamlined most of their operations, people will have to play catch up, and we're going to have a step jump, an order of magnitude adoption. Is it going to be next year or the year after? I don't know, but I think it's going to happen very soon because capital efficiency drives essentially profits, and as soon as the profits make the headlines, everybody's going to basically follow suit, I guess, hopefully.
You're quite right, because adoption really sometimes, very rarely about the technology, to be honest. We know the tech works. It's people, it's culture, it is reputation. It's something I love saying. We've always done it this way. I'm sure all of us have heard that at some point in time. But yes, I think I'm always a glass half full person. I see hope when you have organizations like JP Morgan, like BlackRock. They are adopting, and you're seeing stalwarts actually taking this forward within a contained environment, and because they have to. But there is still hope around that. So when we've talked about TradFi, we've talked about DeFi, we've talked about where we are colliding, right? Certain pushbacks that we get. We've seen opportunities where people are finally beginning to understand. Like Kara, to your point, it's not if, it is a question of when, and that's all promising. So if I would ask each one of you, if you would look out in the future, say 3 to 5 years time, what would you see as the most exciting potential for TradFi, DeFi collaboration? And I'll start with you, Matthew, if you don't mind.
I think probably programmable capital markets. So I touched on it a little bit earlier, but beyond what is currently tokenized, but expanding that to essentially all asset classes, so that we can have one kind of global ledger. I guess touching on back on the regulation piece, it's blockchains are borderless. Jurisdictions and regulators aren't, and that's a real challenge. But I think that when we unlock that borderless, those borderless transactions, and then by tokenizing more and more assets, allowing them to be interoperable and composable, will really unlock the greatest benefits. And I think that could be possible within the next 3 to 5 years, all things permitting.
Thank you. Kara, your view?
Yeah, I share that view around programmability for sure. I probably am slightly less optimistic on the time frame for that to be achieved, but I certainly, when we talk to asset manager clients, I think the more open-minded of those are really looking at this as a transformation in terms of the next generation of wealth. There's a recognition that the generation that is due to inherit a lot of the global wealth today is now largely crypto native for their own personal uses, and they'll expect the same when it comes to their broader portfolios. And so I think there is that vision around composable finance as far as it goes in terms of much more customizable and bespoke solutions for individual investors, which is really not something that is achievable today commercially. I think that is something that would add a great deal of benefit for the industry and to the end investors. But again, that's something that could be delivered within certain subsets of the market, whether that's in certain regions or certain client segments. And so perhaps that's something that is easier to achieve.
Thank you. Ralf?
Yeah, 3 to 5 years out feels
Yes. Yeah.
very tricky to try and predict. But I mean, so on a trend with my other panelists, I think different narratives from DeFi Summit to where we are now at this intersection between TradFi and DeFi, and that's something like 25 years. I think people would have found it quite hard to predict where we're at now, but trying to project that forward. I think with stable coins, RWAs, tokenization, these narratives at the moment with DeFi and its modular finance. I think the bit to unpick for me would be around the sort of tokenization of credit funds and all these sort of great sources of capital from TradFi, but they're still being done in a semi-permissioned way. There's like the ledger is still the source of truth is not actually on chain. There's I imagine someone sat in some kind of registry office with a big red button that can kind of hit at any moment to sort of pause things, but there's this promise that you can have that eligible collateral used within DeFi. For the moment, it will go into various protocols within sort of permission vaults. So I think to go back to sort of promise of DeFi, we'd be able to, how can regulation help, and how will the builders get to a point where you can actually make it that the source of truth comes from on-chain itself? Mm-hmm. That'd be a great place to get to in that time frame.
Yeah. Tim?
3 to 5 years is not that much, I guess, with how things move in real world. But I would hope for nothing really exciting, if I'm completely honest. I would love if we get to a point where it's not DeFi versus TradFi anymore, where all these discussions we had today, I mean, look, the reality is that majority of these discussions will go over everyone's head when it comes to general population, right? This room doesn't represent the 90% of population, and I think that's an issue. I think my parents, for example, not very technical savvy, they don't want to have anything to do with cryptocurrencies besides what they hear in the news, and what they hear in the news isn't necessarily very good. My friends, certain friends, still believe that Bitcoin is a Ponzi scheme. So I think there is a lot of progress that still needs to be made, but what I would hope is for a very silent blockchain revolution where the benefits of DeFi are brought to consumers in a way where they don't even know that they're interacting with blockchain. They just have 24/7 banking, have access to their funds, can send them across the globe for pennies per transaction, are able to earn yields with all the protection that normal bank accounts usually come with. If we would be able to achieve that in 5 years, or at least part of that, portion of that, I think that would be pretty cool.
Thank you. Timothy?
I echo what every other panelist has said. So maybe if I dial in a little bit more here in the UK as a stablecoin issuer, I mean, we have a debt crisis, and we have a fantastic opportunity to find new buyers of that debt through our stablecoin, given that we buy short-term treasury bills. I mean, if we look at Tether, I think in the US, they're now number 5 or 6 largest T-bill buyer. So I don't understand why TradFi and lobbyists and the UK government doesn't champion this as potentially a boulevard to save us from who the hell is going to be buying our debt. And extrapolating a little bit from that, I also think that concentration of debt is risky. We've seen it with Russia and China dumping their US treasuries, and how this can become geopolitical. This is, again, a fantastic use of blockchain, where your debt is decentralized across hundreds of thousands, if not millions of people, creating possibly a better world, more safe, and with less political mania.
Thank you. We have, I do have one more question, but I was wondering, I've been monopolizing the brains of these beautiful minds here. Do we have questions in the audience, that anyone has a burning question to this wonderful panel? No? Come on, guys. Really? There you go.
Okay, so we have these two extremes. We have like the code is small and just basically like reaching peer-to-peer, which are agreements, and then we have like nation states with national legal systems. So that's like two extremes, where maybe one is like very focused on like peerwise interaction and centralization. The other one maybe like too central. Is there something in between? Can we find like a global sort of conventions to some kind of, I don't know, DeFi or something between across nations, basically. So
You mean like standards for like a hybrid? Yeah.
I can give it a try, but I would say that they work hand in hand, because code is law up until the point it breaks, and then you fix it and it gets better, and then you fix it again and it gets better. So it's we're operating with open source code. We're operating with huge pools of intellect that are contributing to that code, and I think this is reassuring to be moving in this open source direction. We've seen successful open source projects in the past. I mean, most of the internet is built on open source protocols and open source code. Most servers are running on Linux operating system, which is open source. I mean, you don't see, Azure selling Windows NT. They're selling Linux software on their servers. So I would say this is just a question of the test of time, and that the more we move forward by keeping these open source conventions, the more the code gets challenged and it gets fixed, and then eventually we find a right balance where everybody's happy with it. It's an iteration. And because we're transferring value for the first time, people are always very hesitant. And I always use this example. If like 5 years ago, you would ask somebody who's not crypto native the choice between putting all his fortune in Tether on Ethereum or to put all his fortune in Argentina, you'd probably choose Argentina. And 5 years later, even though Argentina is doing so much better than it did 5 years ago, there's no question. People would put their money on Ethereum because it has proven the test of time. That code has proven the test of time. And with that, you basically onboarded more adoption. And so right now we're at 400 billion of value, or 500 billion on Ethereum. Once we hit the trillion and then 5 trillion, it's just going to keep unlocking more and more use cases as and when the protocol proves that its code and its smart contracts are capable of delivering this promise. But it won't happen overnight because it needs to pass that test of time, in my opinion. But that's fine. It gives us plenty of room to improve this code and address all these issues that are inevitably piling up and coming to our attention.
I have one here. So sorry, guys. I keep doing this.
Right, let's make this a bit more interesting. So Ethereum is freedom technology, is what Vitalik said. It's building on anarchist movements that very explicitly said that, the nation states and its monopoly of violence is the enemy. That seems to be fundamentally at odds with all of these stablecoin talks, with dollar stablecoin talks very specifically, and also kind of nation states mandated multinational corporations that we're now calling institutions, which we are all celebrating. This all seems to be going against what Ethereum stands for. Sorry to put you on the spot, but how do I square these two?
I think that we have to balance idealism and realism, and if we can bring the existing system closer to our ideals and bring them on the journey, then the end users can receive the benefits of Ethereum and the underlying values. They can still receive it, and that's ultimately the goal, for the maximum number of people to benefit from those values. If we had the choice between complete overhaul and the anarchist endpoint, and either having that completely succeed or fail, or bringing institutions along on the journey and having willing adoption of the technology and a closer alignment to the ideals, then I think that is a safer and more stable transition to the benefits that we ultimately want to see. But that's my personal opinion, not the Ethereum Foundation's. Thank you.
Let me allow one level of pushback. So it seems we are cutting corners. We want to grow TVL. We bring in the institutions, we bring in US dollar monetary policies and make the poorest people on this planet the bag holders of absolutely crazy monetary policies. That, in my mind, is reckless and not necessary.
Do you suggest that it's...
I suggest it's a mistake to bring in institutions, and I suggest that it's a mistake to grow TVL specifically of US dollar stable tokens at this very moment, and not wait until we have actually more resilient money, more resilient building blocks, especially if we talk about bringing this technology to the poorest people on this planet, which always did get exploited and which will get exploited by all the large institutions and politicians that drive them right now.
Yeah. I think that even if it's not ideal, the US dollar is certainly more stable than the majority of currencies that those individuals that you're talking about are currently operating in. So again, even if it's not the ideal, there's significant benefits. And we all, I think, here agree that the technology is transformational, the efficiency gains are significant. And so if institutions are going to adopt it, then we want them to adopt the most credibly neutral and resilient blockchain that there is, not to be passive observers and allow others to influence them for even greater personal or corporate gains. Hopefully, the stablecoin revolution is the Trojan horse that onboards and allows us to then transition to hopefully one day a better monetary policy. But I think that we first and foremost want to bring people onto the technology itself.
Yeah,
I welcome any other opinions as well.
I'll add just one thing to that. I think blockchain technology brings sovereignty to the individual, and I think that whether you're poor or rich, you have a lot more sovereignty on your actions. I don't think there's big marketing efforts in Venezuela to push Tether down their throat. And for a little side story, back in 2017 or 18, when there was NFT gaming mania, I had, there was a game called Axie Infinity, some of you might know, and it democratized, I'd say we talked about Ponzi scheme, but this was, it democratized and gave value to people in emerging countries, namely Venezuela and the Philippines. And within, I think, a month and a half, ecosystems of merchants were accepting that currency because essentially they had people in the neighborhood that held that particular value and didn't know what to do with it because they're unbanked, they don't have crypto exchanges, DeFi wasn't really mature enough at the time. So nobody forced them to play. They played, they made money. Nobody forced the merchant to accept that currency. They accepted that currency. So I think to kind of close on an optimistic note, we have the tools to be a lot more sovereign with our finances and our decisions, and hopefully we keep going in that direction. And I think the key here is choice. If you don't have choice, then that becomes a whole new layer of problem.
I would agree with that. Well, I asked it for a spirited discussion with provocative questions, so thank you for that. Thank you so much to the panelists. I think we've learned a lot. We've seen different perspectives, and also, very importantly, understood the areas of collaboration. So thank you very much.